The Ethereum merge is coming in less than a day, 20 hours and 29 minutes. That's what Google is saying. And the big question is, what's going to happen after the merge? Is the price going to skyrocket or is it going to crash? Is this a sell the news event or is this an event that generates a lot of attention that might actually generate more buying pressure? Now, we could simply just look at technical analysis, and we are also going to do this in this video, but I want to talk about something that's a quite interesting data point. When we look at different borrowing and lending platforms, such as Aave, for example, current APY for borrowing wrapped Ethereum is 63%. This is massive, right? Look at borrowing wrapped Bitcoin, for example, that's less than 1%. And we look at DeForce, a very popular borrowing lending platform on the Binance Smart Chain. Here, borrowing annualized costs 139%. So a lot of people are currently borrowing Ethereum. There's a lot of demand for that. And at the same time, we can also see how Ethereum is, relatively speaking, holding up quite nicely, right? This is Ethereum relative to Bitcoin. And since the 12th of July, Ethereum outperformed Bitcoin by 47%. Now, what are all these people speculating on? Why is there currently so much demand for Ethereum? A very popular trade that's currently being made is making sure to hold Ethereum in your own wallet so that you're part of a snapshot. So it's very, very likely that there's going to be a proof of work fork from the regular Ethereum to a new Ethereum, similar to what happened in the past, right? In the past, there was a fork between Ethereum Classic and the Ethereum we know today. There's likely going to be another fork, and people speculate on when you hold Ethereum at the time of the merge, that you will get airdropped these new proof of work coins that you can then potentially sell off. So that's the idea, right? Whenever you get a fork and you also fork all the transaction history from one blockchain to the next, then you basically get the tokens on the new blockchain for free, and you can decide to sell them or you can also decide just to hold them, but you're basically getting free value. And so the people that are all borrowing the Ethereum here, they don't want to get Ethereum price exposure. They simply just want to hold the ETH during the snapshot, and then once the merge is completed, they're going to just repay the loan again. Now, there is a bit of danger here, right? Because it does look like this is a very common trade and there's simply a lot of demand just because of that. So once the merge has happened, so in these 20 hours and 29 minutes, I think it's very likely that the price is going to dump simply because the snapshot has been done, and the main reason for holding Ethereum for those particular people is then not existent anymore. So I don't think the price will dump because there'll be a big ETH unlocking event or something like this, right? All the ETH, the regular ETH that's being locked up in, for example, Lido Finance, it's not going to be unlocked directly after the merge. It's going to be unlocked months after that, and then also pretty gradually at a relatively slow pace. So it's not the locked up ETH that's the problem. It's the speculative ETH, the people that just want to be part of that snapshot for the proof of work ETH. And so if you're currently hold a sizable amount and you're actively trading in and out of the market, then maybe it's not that wise to hold Ethereum over the next 24 hours. Of course, I can't read the future either, right? I don't have a crystal ball, but simply just based on that argument, I think it's relatively likely that there is going to be somewhat of a supply shock. If we currently look at just the backtested moving averages right now, we are also slightly below those, right? So there are other videos on this channel where I backtest what kind of exponential moving average, what kind of simple moving average work the best for timing the market for Ethereum. Currently, with this current situation, with the recent dump after the higher than expected inflation numbers yesterday, right, where traditional finance sold off, and as extension also Bitcoin and Ethereum, with that dump, we saw again the price going below those moving averages, meaning simply just using that backtest, we would also now be rather short than long. We would be betting on falling prices. And with all that activity around people speculating on the merge, I think it's not unreasonable to assume that the price itself might go down. Another way to actually make money from this is not just to get the ETH to be part of that snapshot, but to actually bet on that price falling. So what you can also do alternatively is you can deposit anything that you think will not be as much affected. So for example, wrapped Bitcoin, you could deposit this and then you could borrow wrapped Ethereum against this, and you could then sell that borrowed wrapped Ethereum against, for example, example, Bitcoin. And then you simply wait until the merge happens. Then you hope that the price will really dump. And if it does, then you can buy back that Ethereum and you can hopefully pay back that loan for a then reduced price. So the idea is simply just to short. You can do this on a decentralized exchange using exactly that strategy. Alternatively, you could also just open up a short position in, say, your centralized exchange, say Binance or Qcoin, for example. If you enjoyed this video, don't forget to subscribe because I publish videos regularly. You might also consider joining our Telegram channel. That's to be found at Bitcoin Strategy Channel. Simply search for that within the Telegram app. And last but definitely not least, feel free to check out the premium membership. There's daily market updates. There's also an internal chat where you can ask me any questions. More information is in this video over here. Hope to see you in that video and thanks for watching this one. Bye bye.